Hello and welcome to the advanced taxation lesson. The topic is on taxation of cross-border activities. Today we shift our attention to what is known as tax information exchange agreements. Tax information exchange agreements. The TIEAs. TIEAs, tax information exchange agreements. And candidates, these are agreements relating to tax matters between countries and these agreements facilitate the exchange of information. First of all, there are agreements, bilateral agreements. These are agreements between countries that facilitate the exchange of tax information. They are tax information exchange agreements are bilateral agreements between countries that facilitate the exchange of tax information or tax matters. Do you understand? By the very phrase, tax information exchange agreement. So these are agreements that facilitate exchange of information between countries. And the agreements are established to promote transparency and to combat tax evasion. So countries agree that they will share information amongst themselves, and the reason is to promote transparency, is to combat tax evasion by enabling the exchange of financial information between different jurisdictions. Is that clear? So what are the key features of tax information exchange agreements? Features. What are the features of such agreements? The first feature is information exchange. Information exchange. These agreements facilitate the exchange of specific information including bank records, ownership details, accounting information, other financial data between signatory countries. So countries agree that they will share information like the details I've mentioned, the bank details for businesses between that operate within the countries. Information exchange. I've given an example of information, bank details. Financial statements, financial data, ownership details, and so on. Scope of information. The scope of information is another feature. Now, the information exchange typically pertains to taxpayers' accounts. Such information pertains to income, taxpayers' incomes, taxpayers' assets, the transactions that are relevant to tax assessment or enforcement. So it's not all information that is exchanged, but there is a limit of information related to tax matters because we are talking about tax information. This is information that may be used in assessing tax, right? That it may be important in enforcement of tax and so on. So scope of information, the information only pertains to taxpayers' accounts, incomes, assets, and so on. Now, given that these are agreements, then the third feature is mutual assistance. Mutual assistance. Mutual assistance. These agreements outline the procedures. These agreements outline the mechanisms for requesting and providing tax-related information between the countries. All right? There is mutual assistance. So if there is mutual assistance, then there has to be procedure on how information will be requested. Number 4, given that the agreements are related to information, then there is the issue of confidentiality. Confidentiality. All right? The tax information exchange agreements incorporate provisions ensuring the confidentiality and proper use of exchanged information. And these provisions may also include safeguards. Safeguards, how such information should be safeguarded to protect the privacy and confidentiality of taxpayers' information. 5, purpose and or objectives. The primary goal of tax information exchange agreements is to prevent tax evasion. It is to promote compliance and also to enhance the effectiveness of tax enforcement by enabling countries to access information held in another jurisdiction. So do you understand? The purpose of tax information exchange agreement is, number 1, to limit or to prevent tax evasion. To prevent tax evasion, to promote compliance, to also enhance the effectiveness of enforcement of payment of taxes, and that happens where countries can share information held in other jurisdictions. So this is purpose and objective, is to prevent, first and foremost, tax evasion. Lastly, we have international standards. International standards. Tax information exchange agreements are often established in accordance with the OECD. They're established in accordance with the international standards set by the Organization for Economic Cooperation and Development, the OECD. Okay? Whose purpose is to promote tax transparency and information exchange. So the standards are prepared, all right? The tax information exchange agreements are prepared in accordance with an international standards that are set by the Organization for Economic Cooperation and Development. Organization for Economic Cooperation and Development, the OECD. So these are the key features of tax information exchange agreements. We'll now move on to discuss the impact or significance of significance of tax information exchange agreements. Point number one is combating tax evasion. Combating tax evasion. These agreements play a crucial role in combating tax evasion by allowing tax authorities to access information held in other jurisdictions, making it harder for individuals or entities to conceal assets or income. We've talked about tax havens and so on, but where we have bilateral agreements that allow in exchange of tax information, then tax evasion can be prevented. Number two, enabling tax transparency. Enables tax transparency. They contribute to greater transparency in international tax matters by facilitating the sharing of information between countries and thereby reducing opportunities for tax evasion and aggressive tax planning. These agreements enable tax transparency. 3, global cooperation. Global cooperation. Tax information exchange agreements promote international cooperation and collaboration among countries to ensure compliance with tax laws and combat cross-border tax evasion. They help combat cross-border tax evasion effectively. 4, improves tax compliance. They improve tax compliance. By exchanging information, these agreements help tax authorities assess and also verify taxpayers' reported income and assets, ensuring compliance with tax laws. The 5th significance is in relation to international standards compliance. International standards compliance. The tax information exchange agreements demonstrate a commitment to meeting international standards of transparency and cooperation in tax matters, thereby fostering trust and mostly between or among nations. It improves international standards compliance. So candidates, this lesson teaches us that the tax information exchange agreements serves as tools to fight against tax evasion. The agreements also serve as a tool to promote greater cooperation between nations, and they also help address global tax challenges by facilitating the exchange of tax information that is necessary for effective tax administration and enforcement. And that will mark the end of today's lesson, where we've studied the features of a tax information exchange agreements. We've defined these agreements as bilateral agreements between countries that facilitate the exchange of tax information and tax-related matters. We've highlighted the features, one of them being information exchange, number 2, scope of information. We've explained mutual assistance, confidentiality and safeguards. We've highlighted the purpose and objectives as a feature of the tax information exchange agreements. Number 5, we have the international standards. We've said that the tax information exchange agreements are established in accordance with international standards that are developed by the Organization for Economic Cooperation and Development. We've gone further to highlight 5 impacts or significance of TIEAs. Number 1, combating tax evasion. Number 2, these agreements enable tax transparency. They foster global cooperation. They improve tax compliance. And lastly, they enhance international standards compliance. We'll stop at that, but before then, here is your today's assignment. Number 1, what is the primary purpose of tax information exchange agreements? And how do these agreements facilitate the exchange of tax-related information between jurisdictions? Number 2, what type of information are typically exchanged under the TIEAs? And how is this information shared between jurisdictions? Can you elaborate on the process and mechanisms involved? Number 3, how effective are tax information exchange agreements in combating tax evasion, money laundering, and other illicit financial activities? What challenges or limitations exist in the implementation of these agreements? Number 4, how do tax information exchange agreements contribute to global cooperation in combating tax evasion and maintaining financial transparency? What trends or developments are expected in the future regarding the expansion or the evolution of tax information exchange agreements? Please do the questions. Thank you for attending the lesson. Bye-bye.